back. You're watching Rise with India Budget Special 2024. Well, as anticipation builds, various sectors are expressing their expectations and demands. President Murmu has already described it as a potentially historic budget. Well, with the expectations ranging from enhanced tax benefits to health insurance under the new tax regime framework and the relaxed payment norms for MSMEs to incentives aimed for boosting the agri sector, well, there is lots more.
Hot on the list is railways, which has been in focus for government for a quite while now. The industry experts predict that the capital expenditure in the railway sector is set to increase by 76% over the next 5 years, which could reach to 2.55 lakh crore. The railway budget this year is likely to focus on massive transformation in the passenger transport systems. These are some of the transformative measures likely to win. Jinay is joining us to give us more details on it. Jinay, over to you.
Well, yes, railways has been a clear focus by the governments from past budget. If you look at the railway budget trend, it has been increasing at a CAGR of 9.8%, right from increasing at 1.6 lakh crores in FY 2021 to increasing at 2.55 lakh crores in FY 2025 interim's budget. Now, if you look at railway segmental expenditure change, then over last 1 year change, you will find that budget for bridge works, tunnel works and approaches increased by 66%, for road over and under bridges increased by 29%, for road safety works increased by 28%, for new lines by 13%, and for rolling stock by 12%. Now, Ashwini Vaishnaw, who is the Union Minister of Railway, also recently gave a significant boost to rail network of India, where he told that production of 2,500 additional passenger coaches have already begun. Also, additional 10,000 coaches approval has been given. Also, if you look at last year, around 5,300 kilometers rail tracks were added, and as far as now, about 800 kilometers rail network has been laid out this year. Production on more 50 Amrit Bharat trains have begun, and if we talk about kavach systems, then railway is targeting to cover about 4,500 kilometers for FY 2025. Now, budget is upcoming, and if you look at three big announcements which are expected on budget front. First is budgetary allocation for railways is expected to come in at 2.9 to 2.95 lakh crores. This year, on front of Kavach, Railways is expected to float tender for about 3,000 kilometers in FY 2025. And moving on, Railway will be focusing on a massive transformation on passenger systems, whereas Railway aims to run about 250 Amrit Bharat trains over the next 4 to 5 years. Also, trials for first sleeper version of Vande Bharat are expected to happen before 15th of August.
Well, moving on to the other sector then, the interim budget of 2024-25 had allocated an impressive 11.1 lakh crore rupees for capital investment in the infrastructure space, which was an 11% increase over the previous year's budget. Now, the allocation constitutes 3.4% of India's projected GDP for FY 25, up from a 3.3% in the previous year. Well, this focus on infrastructure is expected to continue in the full budget as well. Well, to give us more details on that, on the infra capex, my colleague Sharad is joining in with the details. Over to you, Sharad.
You're right, the street is buzzing with a lot of expectations and announcements for the overall infra industry, especially on the capex front itself. Now, of course, the channel checks we have taken from foreign broking houses and also from industry leaders, and also we have taken what is the important sources coming in from our own ET now as well. Firstly, I would like to point out that the focus would be remaining on the infrastructure investments, especially in the rural areas as well. Interestingly, the outlay for the cement, steel intensive related sectors, they are expected to have a strong infra push going ahead. And also the important thing to watch out for would be the raising of public investment even in the healthcare portion to almost 2.5% of GDP, with focus in the healthcare services infrastructure. Overall, 13% of India's capex is government spending, and the rest is roughly almost, you could say, 87% coming from private sources, which includes corporate as well as housing. Also, the street is bullish on an impending sovereign upgrade rating, and when an upgrade rating happens, a lot of flows, especially in debt, comes in, and also in green infra financing is what the investment bankers have been talking about. Also, the capex spend is expected to be almost 11.11 lakh crore rupees, most likely to continue as what the interim budget was in Modi 2.0. and marking a 17% incremental increase in the FY24 capital spend. Overall, extra capital allocation is expected to come into the states post the elections, of course, and the additional spending could be there for PLI, Pradhan Mantri Awas Yojana schemes going ahead. So this is the overall capex spend picture which I'm pointing out to you as what we have collated across the data across all the segments. And interestingly, Gita, the ET Now sources, if we talk about it, they have given us two important exclusives. This includes a 10% more budget allocation for the road transport and also construction of almost 3,000 kilometers of road. Also importantly, I would like to point out is the street is very bullish as what is the continuity of the policy, especially for the larger infra projects. And interestingly, India is standing at the cusp of a revival in the private capex as well. That's what the street is factoring in. Back to you.
Well, allocating a robust amount to bolster military capabilities has emerged as a pivotal strategy for governments seeking to fortify their defences against foreign powers. And experts predict a higher allocation for defence sector in the upcoming budget. Continuing the trend, what has been from the previous years, let's understand from Ria what can we expect from the defence space. Ria, over to you.
Let's take a look at the expectations for the defence sector in the budget this time around. The street is expecting defence to continue to be one of the core focus areas for the government. Now, India currently has a defence production target of rupees 3 lakh crores by FY29, which is a threefold jump compared to the current rupees 1.27 lakh crores. The thrust on defence indigenization is expected to continue, and there could also be an increase in allocation compared to the interim budget. Now, let's remember that the government had allocated rupees 6.21 lakh crores for the Ministry of Defence in the interim budget, which was a 4.3% increase over the previous year, although it was a marginal fall compared to the FY24 revised estimates. Further, even with the new coalition government coming in, defence is one of the key ministries that has seen a continuation of the old ministers, and in such a situation, decision-making is less likely to be compromised. Further, ET Now sources suggest that the push for Make in India and increase in defence exports is expected to continue, and we could also see some further relaxation for exports of defence equipment, seeing as the government has set forth a target to achieve rupees 50,000 crores in defence equipment exports by FY29. Sources also say that we could also see some schemes for the defence innovation ecosystem and to further push defence R&D. All in all, we can expect a bunch of announcements from the Finance Minister for the defence sector in the upcoming union budget.
Well, let's move on to the real estate sector or the housing sector, where there is high anticipation of tax relief and the focus is likely to be on affordable housing. Well, to get us more details, we are now joined by the sector analyst Snehisha. Over to you, Snehi. Tell us what you got.
Well, yes, so the real estate space is a space that has seen quite the rally, especially after COVID. And here's a list of all the expectations or the wishes that the real estate sector has put forth in front of the Finance Minister for the budget that's just around the corner. First up, let's talk about a few announcements that they're expecting on the affordable housing front. And the first one is a credit-linked subsidy scheme under the PMAY. Now, this scheme for EWS LIG, which had expired in 2022, the street is expecting that this should be revived to incentivize first-time buyers to buy affordable homes across the cities, and this will once again invigorate a demand in this segment. So this is a key expectation coming out. Moving on, they're also asking for a reintroduction of 100% tax holiday for affordable housing developers to incentivize developers to build more affordable properties. And the third one, in terms of affordable housing, they're asking to tweak the definition of affordable housing itself, and they're asking this to be widened, and additional deductions should also benefit more buyers. So let's understand what this means. The government must seriously reconsider revising the pricing of homes within the affordable housing budget. Now the street is saying that to keep one fixed affordable housing criteria in terms of the price of the property is not fair pan-India, as property rates and prices are different in different regions of the country. As of now, the affordable housing cap is, the amount is capped at 45 lakh rupees per property, which is not fair according to the real estate sector when it comes to prime cities like Mumbai, Delhi, Bangalore, Chennai and other metro cities. Moving on, let's step away from affordable housing, take a look at some other announcements that are expected. Rationalization of GST rates for under construction properties. And now the current rate is 12% without input tax credit, and it's considered to be high and deters buyers from investing in under construction homes. So the street is also largely expecting some relief on this front. Moving on, a single window clearance system is what the real estate sector has put forth. And the introduction of this for all real estate projects can significantly reduce project delays and enhance the ease of doing business. Incentives for green and sustainable housing is also on the wish list. And lastly, granting infrastructure status to the real estate sector. Now this has been a demand for a very long time, and this move would enable developers to access funds at lower cost and also avail other financial benefits that the infra sector in the country currently receives. So well, that's a wrap on everything and all the suggestions, ideas and the wishes that the real estate sector is expecting to hear from the union budget. Let's see if the budget actually incorporates any or most of these announcements.
Moving on to consumption space, what can government do to boost consumption? Experts suggest that to boost consumption, the government could consider implementing a range of fiscal measures such as providing tax incentives for middle class. What more can we expect? Vinny joins in with more details. Vinny, tell us, what you've got for us?
So absolutely, this time from the consumption side, obviously we're expecting a lot, hoping for a lot more in terms of measures that will be coming in. We're expecting a good balance that could be between fiscal consolidation, growth and welfare schemes, especially in terms of the recovery for the rural. So measures to increase income in the hands of people, to boost the mass discretionary spending power. That's what we're expecting in terms of an increase that we could see coming in. Significant boost, especially for the rural infra, welfare schemes. That's one we could watch out for, as well as we may also be seeing some increase coming in, whether you look at it in terms of rural housing, credit subsidy offer for women, child SOPs, as well as job guarantees. This is going to be through various schemes in terms of skill development scheme is what we could be focusing on, especially on the consumption side, because that will start improving the income in the hands of the masses and the spending power will improve furthermore is what the expectation is. Also in terms of agri loan waiver, now that is something that may stay out this time from the union budget because that's more of a state concern that comes in. So yes, that's what we're watching out for. Also, do not forget, after what we saw in terms of the election results, we did have MSP hikes that already were announced by the government shortly after this new government was formed. So yes, maybe something on that front is also what we could watch out for, but that's even coming in without the budget as well. So yes, key focus is going to be on how are the schemes working out to increase the income in front of and in the hands of rural, and rural recovery is going to be a key concern, what everyone is watching out for.
India's power sector is a top government priority due to the anticipated economic growth and the energy transition. Well, targets include achieving 500 gigawatts of renewable energy by FY30 and adding 85 gigawatts of thermal capacity by FY32. But what can we expect really from this budget in the power sector? For that, my colleague Anisha Jain is joining us. Take it away, Anisha.
Well, as far as the Union Budget 2024 is concerned, we are expecting that the overall focus on capital expenditure, industrials, power sector is likely to continue, and hence there could be increased allocation for the sector. Especially the likes of Power Grid and NTPC might see an increase in the capital allocation made by the budget to these companies. Green energy is also expected to get a huge thrust. Remember, the Prime Minister had announced an important policy and program for rooftop solar. Something more on similar lines can be expected, and the overall allocation to the push coming in for renewables could also be higher. We're also watching out for some of the changes coming in on the taxation front. So Section 50C exemption for the renewable sector has been working quite well. That's expected to be extended this time around. And also the street is expecting that deduction under 35AD should also be allowed to entities which are into the business of generation and distribution of power and electricity in the country. So these are some of the asks coming in from the industry bodies as well. Overall, what we are picking up from our sources suggests that over 50,000 megawatt transmission projects are likely to be announced. Also, the mega plan to evacuate 500 gigawatt of renewable energy by 2030 is something which the government is focusing on. There's also expected to be a focus when it comes to nuclear energy. because that's been the new area that the ministers as well as the Prime Minister had talked about during his Russia visit as well. Plus the overall push coming in for pumped storage is also something to watch out for. So whether there's a VGF on that account or there is some other push coming in for pumped storage is also interesting to watch out for. Hydro projects which had been neglected for a bit might also see a bit of a push in this budget. In fact, Northeast region has been a key focus area of this government. Maybe some hydro projects could be announced there. So it will be interesting to track the entire power sector, but clearly the entire supply chain and the value chain is quite excited about the prospects which could emerge.
People are expecting budgetary allocation, and this time the government has to strike a balance between fiscal policies and the rural schemes.
Absolutely, Priyanka. In fact, if experts are to be believed, they are also, expecting that the budget may provide some kind of an income tax relief, from the government that could be, raising the standard deduction to at least 1 lakh rupees to better align with the present day inflation rate and, of course, the expenses that are on the rise. But nevertheless, this is also a very special budget, in fact, because for Nirmala Sitharaman, because she is going to create history by presenting the budget for 7th consecutive time in a row, and this is just one more time ahead of Morarji Desai, who presented the budget for 6 consecutive times in a row. But here's waiting and watching for what the budget has to offer us and the common man. But with that, it's a wrap on this edition of Rise with India, special budget edition. Priyanka and I will take your leave. Thank you so much for tuning in.
Thanks for watching.